Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 9th, the year's 2020. Let's talk trading. Preserving capital, part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine. Walmal, how you doing today?
I'm doing pretty good. I've made a bunch of pips, so day's been going well. It's been fun. That's always good. I really haven't had a real issue with preserving pips, or preserving capital today. I mean, I did take a loss day where I took a four pip loss, but that's inside my trading plan. So because I kept to my trading plan, I was able to preserve capital.
Yeah, and you wanted me to tell the boys and girls and non-binary traders about my yesterday and today. Yesterday, it was one of those days where no matter which way I traded, no matter when I traded, the price was just going against me. So today, to preserve capital, it's like, okay, I'm gonna quit while I can. And sometimes you just hit these rough patches. I mean, and the difference is like Walmart is on a different trading platform than I. So he and I could take the same trade, but because of the differences, he might get out with a pip or two, and I might get out with like half a pip, and that's happened more than once. And it's just it gets back to, you got to trade what you see. I can't trade what he sees, and he can't trade what I see. We'll talk back and forth. Yeah, it's hitting it. So a lot of times I'll go, well, hey, I'm in it. He goes, well, and he'll say, well, it didn't hit the line yet. I go, yeah, but I'm on the ask, So if I wait for the bid to hit it, that's 2 pips that I might, I'm going to be behind anyway. So I might as well get in. That way, if it does bust through, I'm okay. But if I wait, it might only bust through by that difference. So you got to trade what you see.
Yep, you're exactly right. And that sometimes that can be a little bit of a hindrance if you're trading with a buddy. Sometimes they can get you into some trouble if you're not taking that into consideration. Because the reality is, if you're not all on the same platform, what you're seeing and what I'm seeing are two totally different things. And then on top of that, your personality, my personality, we're going to see things differently as well. I may see a perfect setup there, and you may see something that's disastrous, or vice versa. It's just because we have different trading styles. We may be even trading the same system and still have different trading styles, and that's what's important. And I'm going to bring this around a little bit, talking about preserving capital. That's why it's so important to preserve capital, because the reality is you're going to make mistakes. I'm going to make mistakes. We're all going to make mistakes. And so in order to go and make sure that we don't put ourselves in a position that we can't play anymore, we need to go and preserve that capital. And one of the things I have in place is I talked about this the first day that we were talking about this. I've got my trading plan in place. I've got a line in the sand, how much I'm willing to lose on a trade. I've got another line in the sand, how much I'm willing to go and lose for the day. I got a line in the sand, how much I'm willing to go and lose for the week. I got a line in the sand, how much I'm willing to go and lose for the month. And the reality is, at some point in time in your career trading, all those things are going to get hit. And you just need to make sure that by having those lines there, you don't put yourself at risk that you put yourself out of business. And as long as you do that, you should be okay. And, what, TRO is doing today is a smart thing. Okay? He's had a hard day. He's had a hard day yesterday. And the day before, which he didn't mention, was, he was up. He was up a little bit, in fact, quite a bit. And unfortunately, he took some trades that just went against him at the end of the day. And, so he wound up getting out of those trades. And I think you break even or pretty close to break even by the time you were done. But, so he's had 2 really bad days in a row, if you think about it, because he was up and then he had to go and actually have a break-even day. And then the second day, had a hard day because it just went against him. And that was sort of like, every time I saw him taking a trade, they weren't bad trades as far as I could say. The market just didn't smile on him. And that's going to happen.
It sure didn't. And there's one other thing about trading off of different platforms. One platform is going to lead and one platform is going to lag. And back in the day when I was trading, really heavy, and I had 5 computers online, I had 3 different feeds. That way I could tell if this broker's going, price is moving here, price is moving there. Oh, on this third one, they're lagging. Guess what? It's going to move. I can jump in. And even though that lag might only be a second, that there's enough movement where if you see, like right now, price on my screen says 97.2 on the ask. If that were to jump to double O, and on the other one it was still around 97, then I know it's going to jump up. So I would jump in that trade long and take advantage of having that extra feed. And you might only be making a pip or two, but when you're trading, like $100 a pip or something, you're stacking bricks. What it adds up.
You're exactly right. And so I don't know if I could personally go and do that. I know there are people out there that do that and will actually go and manage, having accounts on all these different brokers. I don't think I have the skill set to do that, but I do know that there are folks out there that do have that skill set and can do that. Or they could also write algorithms to go and do that, but then you have to have, super fast computers with super fast, internet lines. So it can be done. It's just a question, whether or not you've got the resources to go and put in place to go and do that. Yeah. I certainly don't.
Yeah, so right now we're at the top of the hour with a Walmal line at 90 to the short side and double O to the top side, which the previous H1 low is also at 90. So this should be a very interesting hour here, considering I think this bar right here, I'm showing the traders on my screen here, this big green bar, this is something we would call a return bar. And so the low of that bar is 76. So I would say prices needs to get back to that 70s, or not the low. I'm sorry, what was the open? The open was 78.6. So it needs to get back to 78.6.
Right, and the thing is, it all comes down to whether or not this 90 line gets broken. And what's really interesting about this 90 line is the fact that you do have the previous 1 hour. It went down there, it tested it. It didn't bust through it. My low on that was it got down to 90.4, so it didn't even get through it. So if it breaks that 90 line, it's probably off to the races. But if you look where that big green bar is, 2 candles before that, you got a high that's right there, and it's sitting right there at the same spot that we opened at. So that's the tension that's the fight that's happening in the street right now. Are we going to go? Obviously, we rejected that price before it went down, and then obviously blasted through it. So who's going to win that fight? Is it going to be the people who are trying to go and push the price down further, or is it people who are trying to go and push the price up? I don't know who's going to win. What do? I set a trade, and I just go and set the trade, and I trade what I see. If it's working out, I stay. If it's not working out, I'll look for the next opportunity.
And you see, and this is why it's kind of cool, like when Walmal and I are on the line together when we're trading. See, he looked left, and he saw, maybe he drew the line just where I have the cursor. I didn't even notice that, but you're right. I see that green candle, 2 candles before the big green candle, it rejected off of there. And went down, all the way down to almost to 60.
Right.
And so we're at that same point at the open. So it's like, and on your candle, you hit 90.4. On mine, I hit 90.0. So right there's a 4-point difference between the 2 brokers.
Yep, that's a half pip difference, and that sometimes that's your entry point. And that's why sometimes I'll get into a trade and you won't, and vice versa. Sometimes you'll get into a trade and I won't, just because of that half pip difference. Because for me, I need to go and jump into that trade because I need to go and break that line. I'm not getting into the trade until I break it. I'm not convinced it's going to go and do what I think it's going to do until it goes and actually does it. So that keeps me out of some trades that may not necessarily, because you're going and playing off the ask. Your ask has already penetrated the line, and it's it's a done deal. Or your bid has already penetrated the line, depending on which way we're going.
Okay, it just broke it on mine.
Yep, just broke it. I'm down to 89.9 now.
See, I was at 89.5 right when you said, back there. Yeah, and you see it just came back up. So that
Yep.
was the first break this hour. So here we're going to test it again. Here we just did.
Yep, I'm stretching my chart out just to see what it's going to go and do. You know, I'm hoping that it'll go down. I did go and take the trade, even though that kind of violates my rules because I usually want a second push through.
On a
so I jumped in.
When you say second push through, you're talking about on a second M5 candle, right?
Correct.
Yeah.
Yep. But I just took the chance to see what it's going to do.
And there we go.
You know, so yep. Here we go. And I'm going to go and get out of this trade right now. And the reason why I'm going to get out is because it stopped. I got a one ball and it stopped. So I just got out and
you were on M5 or M1?
I'm on the 1 hour candle.
Oh, you had I didn't have the, let me switch this chart over here to 1 hour. Yeah, there's the one ball right there.
Yep. So I went and jumped out. And now here's the thing. I got out, and after I paid my commission and everything, I got 3.1 on it. Potentially, I could have gotten as much as 10. Okay? And here's the thing about this. Look what it's doing right now. Look how it's coming back. Okay? And the reality is I got out where I got out, and the reason why is just because I saw it stop. I saw that one ball show up. I got out. That's my rules. Those are my trading rules. And this is how much regret I have in my body right now, or in my brain right now, because of getting out too early. 0.0. I have no regret whatsoever because I was able to pick up those pips, okay, and I followed my plan. I did everything right. And everything in my plan just is there to preserve capital. My plan actually is not built around making capital. And it's so funny because a lot of people tell you to go develop your plan so that you know how much you're going to make. Develop your plan to go and maximize your profits. No, my plan is built around this idea of I'm going to minimize my losses.
Hey,
and that's just me.
Yeah, Walter, where did I say price had to get to?
Oh, I know. In fact, you said it right here on the video. The whole world has it documented. It went right there, and it touched it and rejected right off of it.
Well, actually, on my chart, it went through. But, this is, it based on, hours of charts and statistics. It's just like, and knowing that this return bar has to get filled. Now, you see this return bar way up here, boys and girls? And, let's see. The open was 34.59.3. Price needs to get back up there.
At some point in time, it's got to get there. Now, it may not happen today. It may not even happen this week, or even this month for that matter. But at some point in time, it will cover that back up. So, the idea behind that is that, at least the way I play that, is that the next time I get in that area and I get a valid signal to go long to cover that, I take that valid signal and then I'll look to say, hey, I got a good chance that that's going to drive all the way back up to the top there. Now, on getting up there, I also know that, again, looking to the left of that candle, look at all those big old wicks that are sitting there to the left of that. And what do we know about wicks? We know that price doesn't like to go into wicks. It likes to leave wicks. So to get to the top there, it's going to have to fight those wicks. So you look for that signal, to get you into there. And I probably would take profits off. I may even take my entire profit off and then wait for another signal that gets me to go long again halfway through those wicks, because then I know that, hey, price likes to get out of wicks, what you call a wick zone, TRO,
right.
And, look for an entry for a long, to get out of that wick zone and take me out of that and then carry me through all the way back up to the, 30, on my chart, 34.59.
Yeah, and you know what? The fastest 15 minutes in trading is just about up, fellow traders. So, preserving capital, sometimes, like I did today, you just have to stand aside and you watch and you see. And as you see, I called that trade, but the way it was happening yesterday, I was calling them and price was reversing. So I just had to stand aside, maybe get my groove back, right? But anyway, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.